Welcome to your world of stress-free rental solutions. When you work with Renters Paradise, your professional landlords, your peace of mind is assured. Whether you're renting out, looking to rent, buying or selling a property, just give us a call on 055 195 5366 or 055 195 4406. Renters Paradise, your peace of mind assured.
Hello world, welcome to Africa Let's Talk. My name is Collins Kofi Opon. You can call me Mr. Beyond. Tonight, we are talking about essential updates to know about your 2021 taxes. And definitely the 2020 year was tough, especially with the pandemic relief bills for individual households and businesses, which brought a lot of changes to the 2020 taxes. And filing for the 2021 tax year doesn't exactly look like it's going to be any much easier, especially for those who are yet to file their taxes. There are also the usual updates to tax brackets as well as standard deductions and many more. Tonight, we are hosting this conversation with a tax and accounting expert to help us understand all the changes and, of course, what it could impact your tax returns for the 2021 tax year. My name is Collins Kofi Opon, like I mentioned earlier. Don't forget that this program is actually also supported by Renters Paradise. At some point in this conversation, we're going to talk about Renters Paradise and the unique work that they are actually delivering for both homeowners and renters. But for now, please help me welcome my guest for today, Mr. J.B Danquah. Like I said, he is a tax and also accounting expert to help us to actually talk about the essential update to know about your 2021 taxes. Mr. J.B Danquah, good to see you.
Good to see you too, Collins. It's been a while. But
yes, it's been a while. It's been a while. And I know this has been a busy season for you. So we are also happy that you could make time for us to today talk about all the essential updates for us to know about our taxes. If you join the conversation, please, you are more than welcome. Do me a favor, share the video, invite your friends, and if you have any questions whatsoever, please, you are more than welcome to ask the tax expert, even whilst we delve into the conversation. To begin with, Mr. J.B Danquah, we want to know the 2021 tax rates and brackets any different from the previous year? What is the situation on the ground?
Thank you for having me. And let me say good evening or good afternoon to your listeners. I wouldn't say there's been a change in the tax bracket per se, but there's been a lot of changes that affect what your tax liability will be. The first thing I would like to mention is for instance, for people who are filing with children, be the child credit that has changed, that's increased quite substantially. There's something also called earned income credit that has also changed, and probably we can talk about it later on. The deductions that you can make have changed. Your refundable credits and non-refundable credits, most of them have changed. Your charitable donations rules have changed. So the tax bracket itself did not change, but all this ancillary stuff have changed. So it worked together to affect your taxable income, and therefore your tax liability has changed, and it will have an impact on your bottom line, which may be your refund, or if you have to pay back to government, how much you pay to government.
Wow, that is interesting. Indeed, would definitely be interested to know more about these changes. So, actually, delving even further, what will you say has been or are the major changes, the tax changes this year, and then how was it different anyway from the previous one? So, I mean, of course, if you want to explain further for us.
Yes, let me give you some breakdowns.
Please.
Previously, if you were filing as an individual, there's a certain level of amount of income that you have to get before you can be able to access
I think your feed. Yes,
an
I
income
think.
credit. An income credit is
Okay.
that is giving people for working. So previously, you had to.
Mr. Danquah, can you excuse me? Can you hear me? Yeah, I think
I can hear you. Yes.
you went in and out a bit, so I didn't hear or we didn't hear the first part of what you were saying. Can you please repeat for us?
I said that what the first change that I'll mention besides child credit is earned income credit, because I know that most of your listeners or viewers uh, may be interested in hearing that, because they are the very people who may benefit from such credits. And I was trying to explain what earned income credit is. It
Okay.
is a credit that is given to people for earning income. It is to encourage people from trying to take handouts, get benefits, like just go for welfare payments or unemployment. This one, you have to earn the income. You have to
Wow.
work and be paid, or do something and be paid in order for you to get that credit. Previously, you had to have income which is at least above the threshold where you could be taxed. There's a minimum income that you have to get in order for your income to be taxable.
Right.
So your income has to be more than the taxable income in order to start benefiting from earned income credit. This year, that has been eliminated. So it doesn't matter how much your income is. It can be $2,000 for the whole year. You can still get some earned income credit. So people have to be aware, so that when they go to file their tax, they should expect that at least they'll get something small. That's the first big change that came in. And of course, the child credit that has increased, it has more than doubled. It used to be 1,500, now it's about 3,000. And there's also an additional child credit that goes up to about 1,000, depending on your income. And the level of income that the additional credit faces out has also changed. Let me give you the actual numbers. Yeah. Previously, they were lower, but now it is, if you're single, your income gets to 75,000 before it faces out.
75,000 if you are single.
75K. Yeah.
Okay.
And if you are head of household, it's 112,500.
112,000. Okay.
112,500.
1125.
And if you're
Okay.
filing joint, you get it at 150,000.
If you are filing as joint.
Yes.
Okay.
So you realize that a lot of your listeners will fall within this income bracket, and therefore they're more likely to enjoy that additional child credit that were not available last year, and thanks to the new bill that was passed by Congress.
Okay.
And previously, you had to have 2,500 as your minimum income in order to receive the earned income credit. Now it's been abolished, completely eliminated. And also, the age limit for people who can receive earned income credit has been lowered to 19 years.
To
Now, if you are
19
19
years.
years, yes, and you file tax, you can get earned income credit. And the age limit, the ceiling, has been removed. So you can be 200 years, and if you qualify, you qualify. You get it.
Oh,
If you
okay.
can work and get some money, you qualify. So that has made more people earn some refund this year. So people who have been filing their taxes already in this current year will realize that their refunds have been more than the previous year.
Oh,
The
okay.
only caveat that I'll put on this is, I wouldn't say caveat. Those who are not seeing a lot of money or a lot of changes in their refunds are because they took the advanced child credits. You know, there was some money that was being given to
Oh.
parents. I'm sure you don't have children yet, so you don't see that money. Those who have
I
kids,
do
they are
though. I do
getting.
though.
Oh, thank
Yeah,
God.
but I
Those who have
understand what you
kids,
mean, because was it the one that was paid monthly? Some people were receiving it monthly.
yes,
Oh,
yes,
okay.
yes. Children who were 5 years and under were getting 300 a month, and then children from 5 to 17 years were getting $250 a month. So that money were given to the parents as advance payment. And
Mm.
let me emphasize this point very well. People are going around saying that that money that was given to parents is being taken back by government or is being taxed. It is not true. Government is not taking it
Okay.
back. He's not taxing it. What is happening is, if you had 2 children and say your child credit was supposed to be 6,000, and therefore if you come to file your tax at the end of the year and you had not taken anything, it means you're going to get that 6,000 plus whatever that your situation will allow you to get from your tax. So
Okay.
if you're going to get income credits and you're going to get this and you're going to get that, plus your 6,000, you're going to get 8,000. And in the course of the year, you took $3,000 out through the child credit advance, which government gave to you at the end of every month. It means out of your 8,000, you've already taken 3,000.
3,000. Okay, so it's remaining like
Yes,
5,000.
5,000. That's what you get when you come to file your tax. But some people are expecting that, oh, I've taken that 3,000, I should still get all the 8,000.
Oh,
And if you
okay.
tell them, no, you have taken advance, then government is taking it from me. It's not taking it from you. If
You've
you take
already
salary
taken it
advance,
yourself.
yes. If you
Wow.
take salary advance, if your income is 2,000 and you take salary advance of 500, and at the end of the pay period, if your employer is paying you, he's not going to pay you 2,000. He's going to pay you 1,500 because he already
Absolutely.
took 500 as advance. It doesn't mean that the money that he gave you, he's taking it back, or he's not doing anything. He's just giving you what is left.
What is
So
left?
people should take note of that. Yes,
Okay.
people should take note of that. So that is why people may not be seeing a lot of increase in their refund. Otherwise, there's a lot of money in filing your tax this year.
This year. Wow. Once again, this is Africa Let's Talk. We're talking about the essential updates to know about your 2021 taxes, especially for those who are yet to file their taxes, and have the privilege of speaking with Mr. J.B Danquah. He is a tax and accounting expert, and we are actually delving into the issues. If you have any questions whatsoever, please do me a favor, share the video, or better still, ask your question, and we would definitely provide the answer, because the tax expert is here, and that is what we are seeking to do. Mr. J.B Danquah, so for example, if an individual received unemployment benefits in 2021. Of course, we just talked about parents who received the child credits. But in this case, if an individual received unemployment benefits in 2021, how will it affect their tax filing for 2021?
There isn't any significant change between 2020 and 2021. The
Okay.
only thing that I'll maybe emphasize on is, last year they gave us a little break on unemployment income because of COVID, because
Okay.
so many people were home depending on unemployment. They gave us a break. That I think the first 10,000 was tax free for last year.
Oh,
This
okay.
year it's not like that. So yeah, it may impact you a little bit if Last year, if you made $10,000 in unemployment income, you pay nothing.
Mm-hmm.
This year it's different. This year you go through what it was before last year. We've gone back to our old system. That's the only thing. Otherwise, it is just as it has been in the past. Your unemployment income is part of your income, but it is not considered earned income. So when we are calculating earned income credit, we exclude unemployment income and calculate it based on your earned income that you have actually worked and be paid, not what was given to you by an insurance agency, which is unemployment. Unemployment is an insurance. It is not something that you worked for. It's insurance that you are getting. Yeah. So that's the only difference that you see there. Let me also take advantage and mention that as part of limiting, removing the limitations on receiving earned income credit. Previously, if you had investment income, for instance, if you were going to do your tax and you're supposed to get earned income credit, but you had done some investment in stocks or something that was above 3,650, then you wouldn't qualify for the earned income credit.
Oh, okay.
You wouldn't get anything. But now that amount has been increased to 10,000. Unless your investment income is 10,000 or more, then you will not qualify for any income credit. But if your investment income is 9,500, you still get an income credit. So that's one of the changes that is positive to for people who are filing their taxes. That you can earn your income, do some investment, make money, and still be eligible for earned income tax credit. I don't know if I'm making sense.
Absolutely. Absolutely. And again, I know if people have questions, especially with regards to the end income and also how it affects how much you earn and how much you're going to get in returns, please, you are more than welcome to leave your questions for us and we will be able to answer for you. Mr. J.B Danquah, the other thing I wanted to know was we're talking of tax credits and also tax deductions. I just wanted to know, I know you've mentioned it also in your previous submission, but if you can reiterate how tax credits or tax deduction affect how much returns that people may receive from filing their taxes or how much they may even have to pay back to the IRS. So if you can educate us on tax credits and tax deduction and how it affects the returns.
Before I go there, let me also mention child and dependent care.
Child and dependent care credits. Okay.
Yeah. Say you have a new child, and then when you go to work, you send that child to daycare for somebody to take care of that child. Previously, you could only claim credit for up to 30%. Now you can claim credit for up to 50%.
And what does that mean?
That means if you had, say, dependent care cost of, say, 3,000.
Oh,
previously, 30% of 3,000 is what? Maybe 900 something.
Yeah, I think about
3,000 about 900.
Yeah.
No, 900.
Okay.
That's the only, you could only claim 900 as a deduction on your tax.
Yeah.
Now you go to 50%, which will be 1,500.
1,500.
So it means you can claim more, 1,500, and one person can claim up to 8,000. So it means, if you have childcare of about 16,000, you can claim 8,000.
8,000 from the 16,000. Okay.
Yes, with the 50% of that.
50% of
anything above that you cannot.
Okay. Which is a big advantage to parents, especially the fact that now it's increased from 30% to 50%.
Especially those who are now childcare is very expensive. Very expensive. Now let me talk about deductions and credits. The big difference in the two is a deduction only minimizes your taxable income and therefore has the potential to limit your tax liability. What do I mean by that? if you have an income of 100,000, before we apply the tax credit to it, we do deductions.
Okay.
To arrive at your taxable income. And some of the deductions include your itemized deduction or standard deduction, your charitable donations, this, that, blah, blah, blah. We apply those to your income to bring it to a level that, to bring it to your taxable income, an income where we are going to apply the tax rate.
The tax
so
rate.
if we say tax, yes, if we say tax rate is say 15%, we don't just take the 15% and apply it to all your 100,000. No,
all the 100,000.
we
Okay.
do all the adjustments,
and
then when we get your taxable income, then we apply 15% to it.
Okay.
So
okay.
if you have a deduction of say 20,000 and your tax rate is 15%, then you go and reduce your 100,000 by the 20,000, and then you apply the 15
to 80,000.
50% to the 80,000.
Not
So
the
what
100,000.
the 20, not the 100,000.
Okay.
So the 20,000 has helped you by reducing it by 20 by 15%, which will be about $3,000 or something. If we should calculate, 20,000 by 15% will be 0.5.
20,000 by 15%. I think 3,000.
3,000.
Yes.
So it has helped you by about 3,000. But if you have a credit, a refundable credit of 20,000, that is dollar for dollar. That one, after applying all your deductions, and we apply your tax rate and say that your tax is maybe 40,000, or your tax is 10,000, you can take 10,000 out of the 20,000, that which is your refundable credit, and pay your tax, and give the remainder 10,000 to you as cash.
Oh, okay.
But the deductions cannot be given to you as cash.
The deductions of the 20,000.
Yes.
Okay.
If you apply that 20,000 to your taxable income and it brings your taxable income to zero, you don't get anything, you don't give you anything. That's it. You're done.
Oh.
But if it is a refundable credit, like child credit, it will be given to you as cash. Oh, we'll pay your tax, but this is what is left. Take it. So deduction is good, but nothing compares to a refundable credit.
Okay. Okay.
So that's why I use your home mortgage interest, the money that you pay into your Roth IRA, all those, and even your dependent care, they are deductions.
They are deductions.
Your lifetime credit from school, they are deductions. They are not credits. They're not refundable credits.
I see.
So when you have those deductions, all it does is it comes to reduce your income.
Sorry, Chairman.
If you refundable credit, that credit is applied after your deductions are done, and then you come to your tax liability. Then your credit comes in to defray your tax liability. Your tax liability is how much you're owing to pay government.
How much you are owing? Okay.
That's when your credit. Yeah, that's when your credit comes in to defray your cost, and if there is excess, it comes to you as cash.
Okay. Okay. Wow. Thanks so much.
If you are hearing me.
No, I'm having very good understanding, and of course, learning into the differences, especially with tax credits and tax deductions, and what they actually mean, and how it's applied in the taxing, especially for 2021. Please, if you have also any questions, you are more than welcome to leave them in the comment box, even as we go along in this conversation. So, Chairman, the other thing I want us to talk about has to do with capital gains rates. So if you can also educate us on capital gains rates and how does the IRS especially taxes capital gains? Hello, Chairman, can you hear me? Oh, I think we're having some break in transmission. We're going to take a quick break. And when we come back, we're actually going to talk about, like I said, we want to know about capital gain rate and then how it's also taxed by the IRS. That is the conversation we are having and more with Mr. J.B Danquah. He's going to join us in a minute. Please, in the meantime, if you have any questions about what we are talking about, which is essential update or to know about your 2021 taxes, you are more than welcome to leave them in the comment box. And we will definitely ask Mr. J.B Danquah when he comes. For now, let's take a quick break and we will be right back.
Welcome to your world of stress-free rental solutions. When you work with Renters Paradise, your professional landlords, your peace of mind is assured. Whether you're renting out, looking to rent, buying or selling a property, just give us a call on 055 195 5366 or 055 195 4406. Renters Paradise, your peace of mind assured.
Do you know that vaccinated people who catch COVID-19 are less likely to report serious illness with COVID-19 and related health problems than those who are unvaccinated? Getting the COVID vaccine is the surest means to protect you and your loved ones. The vaccine guides the body to identify COVID-19 and fight it. Get your vaccine shots and stay healthy. Vaccines are good for adults, youths, and children aged 5 to 11. If you need help to find a vaccination center or schedule a vaccination appointment, please call the African Career Education and Resources ASAP at 763-307-4731. You can also stop by ASA's office Monday to Friday 9 a.m. to 4 p.m. The address is 6800 78th Avenue North, Suite 101, Brooklyn Park, Minnesota, zip code 55445. Like I mentioned earlier, we speaking to Mr. J.B Danquah here. We have him back on the line to actually speak to us. We lost him briefly. Mr. J.B Danquah, can you hear me, please?
I can hear you very well.
Okay, all right. So the next thing we wanted to talk about was capital gains rates and how does the IRS taxes capital gains?
Well, capital gains, for those who may not understand capital gains, it's just when you invest money, especially in the stock market, whatever profit, let me say in a layman's term, whatever profit that you get from your investment is your capital gain. For instance, you buy stocks at the price of say $20 per share, and you end up selling it at $25 per share. It means your capital gain is $5 times the number of shares that you may have bought and sold. And we have two kinds: long-term capital gains and short-term capital gains. Anything within 1 year is short-term. Anything after 1 year is long-term capital gains. There's a whole table that comes with it. For long-term capital gains, the tax rate up to 40,000 now is tax-free.
Up to 40,000 is now tax-free.
Tax-free if you are single.
Okay.
If you are head of household, up to 54,100 is tax-free. And if you are filing joint with your wife, 80,000. For the single people, if you go above 40,400, then it comes with 15% tax.
So is it a profit
so
or the
gains
investment?
Is taxed lower. No, the profit, the gain.
So on the profit, okay, the gain, okay,
only the gains. Yeah.
Okay.
Yeah. So if you invested 20,000 into the market and you offload your assets and you make say 30,000, your gain is 10,000. The difference between your cost basis and your proceeds. That means how much you bought it, how much you sold it. The difference is your
difference.
It's your gain. And the tax is applied to only the gain.
The gain, okay.
Yeah. There are other rules, but I don't want to bore people with disallowance of wash sales and no, let's not go there. So those are the rates. So virtually for somebody like you and I, who may not be investing so much in the capital market, we may get a long-term capital gains free. So I will advise people to invest their money in the capital market and let it stay there for more than a year at least, so that you can get free money if you really make a gain.
Yeah. Yeah.
But for short term,
Mm-hmm.
it's only 10,000.
Oh,
It's
for
only
short term,
10,000.
it's only 10,000.
Yes,
So anything beyond
yes,
10,000 will be taxed. Any gains beyond 10,000.
yes. No, no, even up to 10,000. Not everything is taxed. Up to 10,275 is 10% for single people.
Oh, for single people.
Married
Okay.
people is 20,550.
Mm-hmm.
So if you are married and you're filing joint with your spouse and you have short-term capital gains,
Mm-hmm.
anything from $1 to 10,000, sorry, to 20,550, you pay 10% of that as tax.
Oh, okay. Okay.
And if you're head of household, 14,650 is
Mm-hmm.
10%. If you go beyond that, then the rate goes to 12%.
Oh, okay. Okay. Is it for both head of households and also single, or just
No,
for the head of household?
no. The 10% bracket, if you
Mm-hmm.
are single, is up to 10,275.
Okay.
And so for joint filers, you double that.
Oh,
If you are
okay.
filing joint, double that. For head of household, it's 14,650. Up to that amount, your tax is 10%. If
Okay.
your short-term gain is up to the amounts that I'm mentioning,
Mm-hmm.
for single filer, 10,275. For married, 20,550, and for head of household, 14,650. You pay 10% tax.
Okay.
If you are a single filer and the gain goes beyond the 10,275, between 10,275 and 41,775, your tax rate is 12%.
12%.
Yes.
Okay. Okay.
And about 41,775, your tax rate goes to 22%. It's a jump, big
22.
jump.
Oh, wow. That is
Yeah,
almost double of that.
that's a big jump. Yes.
Yeah.
So if you make a lot of money in short term, you pay a lot of tax.
Wow. So the lesson here is to encourage people to invest long term instead of short
Yes.
term.
Yes.
Okay.
You see, they are trying to catch people who are playing with the stock market. They just buy the speculative buying. They just buy and
Mm-hmm.
hold it for 2 weeks and sell it to
Yeah.
to cash
Mm-hmm.
whatever they make, and then go buy somewhere here. So they play the market. Government says that if you do that, we can't stop you from doing it, but if you do that, you give us more money too, because you are making a kill. Give us more money.
Yeah. Yeah, I think that's actually a very good lesson to me and to everyone, indeed, especially for those who are always tempted to only invest in the short term. Now, there is a motivation, indeed, there is a
To stay in
incentive
there
for
for
you,
1 year at least.
yeah, to let it stay for 1 year, and then you can actually evade some taxes. Mr. JB, the next thing I want to know, I know some business owners or business people are actually watching us. If, for example, a business owner reaches out to you to help with his or her taxes, what are some of the information or documents that you require of them? Because I think that is where most times people are lacking. They don't present the right information, meanwhile they want the right returns. Can you actually educate us on some of the information or documents that business owners need to get ready before they file their taxes, or even if they are coming to you to help them with their taxes?
There are different kinds of businesses, and every business uses a different form.
Right.
If your business is a corporation, you are filing your tax on Form 1120. If your business is a S Corp, a subchapter S, you are filing on 1120S. The requirements
Mm-hmm.
are different. If you are an LLC, you file LLC single shareholder.
Mm-hmm.
It's a Schedule C. That one
Schedule
you
C.
file it. Schedule C, you file it on your personal tax.
Okay.
If you are filing um, 1120, it means you are a corporation. Your business is called Mr. Beyond Incorporated. It means a corporation.
It's a corporation.
You are
Okay.
filing on 1120. Depending on your income level, depending on the revenue level of the company, there are certain forms that you may file. A typical one that I would say is a balance sheet that may be included in your tax. And many people will come to file their tax and they have no idea what a balance sheet is. And it becomes a problem. So what I would advise people is that if you have a corporation, keep good record of everybody who owes you. Those are the people who are going to give you money that we call receivables. If I owe you, it means you are expecting me to pay you something. So to you, it's a receivable. You know, there's a probability that within the next months or weeks, or I will pay something to you, receive something. So we call it receivable.
Receivable.
To receive.
Okay.
Yes. To me, I am paid to you. So to me, it's a payable. So every business person should keep good record of the receivables and the payables. Those that you're going to receive and those that you're going to that you are going to pay.
Right.
Yes. You also come with your end of year bank balances. So when 2021 ends, you have to have what is your bank balance, the money in your bank account. How much was it at the end of 2021, December 31st? How much money was in your account? You have to note it down. Then all your assets. You have to have a list, an inventory of your assets. You have a car, you have a building, you have furniture in your office, you have TVs, you have computers, they are all assets that can be sold to defray a liability, to defray a cost or a debt to you. So you keep inventory of that. Bring them when you are coming. And then if you don't have an accountant to be keeping inventory of these things, you have to do it yourself. And know the value of all of them.
Of the assets.
If you don't know, yes, of your assets. If you don't know the value as at the time that you're going to do your taxes, at least know the value of the asset when you purchased it and the date of purchase. So if you know your car was purchased at 100,000 and you know when you purchase it, that the tax preparer, if he's a good accountant, can help you determine what your depreciation is. Because you have given him some information that I can, based on that, determine that now the value of your car may be about this. So when you have all these, now the IRS is very strict on people not tracking or documenting mileage.
Oh, okay.
And this one cuts across. This one cuts across, whether your business is LLC or sub chapter S or a partnership or a corporation. Everybody has to track your mileage. So if you don't know anything, go to Walmart or go to any of these stationery shops and say you want mileage log book. Mileage log book. Every morning before you go to do your rounds for your business, you put the date, where you are going, your starting point, your end point, where you're going, what you're going to do, and your beginning mileage, you put it down. When you come back, you put your end mileage there. At the end of the year, you total all of that. When you do your taxes and the IRS audits you, those are the things they look at. If you don't give it to them, they quash it. They will take all that mileage that you claim, they will kick it out. And that will raise your tax that you have to pay. So please take note of that. Make sure that you track your mileage. You have a list of your inventory and you keep your receipts. Everything that you buy.
Wow, interesting. So it's not enough for people to just be having estimates. So, for example, they find the taxes, then they think about it. Okay, what is my mileage now? It's 10,000 from the beginning of the year to now, and they consider that, okay, I might have used 3,000 of that for businesses, and then they write 3,000. Is it not enough?
You see, it's not enough. You see, IRS will not. They will not come after you for years, but the day they will come after you, you sweat.
Oh my goodness.
You sweat. So you know, wow. People think that, oh, I've been doing it, nothing has happened. So sometimes people come to me to do their taxes, and when I insist on some of these things, they think I'm being too much, or you're asking too much, and sometimes they will never come to you. Go. The day you meet IRS, you will remember me.
And they will come back to you.
Yes, you remember me. You know that there's something there. So don't just think that because you did it last year and you are not caught, you can do it every year. No, you'll be caught one day. So keep track. Have your receipts. Have your receipts. When they ask you, why do you say that you spent so much money on travel? You went to New York, you went to this place. What's your proof? You should have proof to show your people. So basically, those are. But if you are, for people who have partnerships, if you have an LLC with 2 people as owners or 3 people as owners, when you're going to file your tax, number 1, know the name and social security number and address of all your shareholders. Okay. And you have to know the percentage share that they hold. So if it is me, you, and another person, and if I'm 40% shareholder, you should know that. Because whatever the tax preparer will do, he will need those numbers, those percentages to calculate what Schedule K to give you. Without it, he can't do anything. So make sure you know that, give it to the person, plus all the other things that I've talked about that you include in your documents that you send to your, and make sure you go with your tax ID, both state and federal. If it is just an LLC that you are the sole owner, it's not necessary. You don't have to have one. You don't have to have a tax ID to do business per se. But if you're a partnership, it means you are going to do Form 1065. You cannot do that form without a tax ID. Yes, that one you have to have a tax ID. And your insurance, all the shebang, you have to get them ready and send them to your preparer for him or her to help you.
Okay. Wow, this is good education indeed. Anas Nate says good education. We are all learning a lot. I think the next step that probably if time will allow us, is to talk about small businesses owners or small businesses that received either the PPP or the SBA loans in 2021, and how that may also impact their tax filing, if any. And maybe we can combine that with if someone actually, let's deal with this specifically. If somebody or a business received the PPP loans or the SBA, is it also going to affect them? Is it supposed to be an income? How do we understand and deal with this?
The simple answer is no. PPP is a loan to you. It doesn't affect your tax. And most of the people who receive PPP, I mean, most of your listeners are likely to be those whose PPP have been forgiven. If it's forgiven, it's forgiven. Nothing. If it was you see, government gave PPP, some other agencies gave grants. When the COVID was, there were a lot of grants going around.
Yes, very true.
Some of the grants are taxable. And if the grant is taxable, the person who gave you the grant or the agency that gave you the grant will send you a 1099 and tell you how much he gave you. The moment you receive that 1099, you know it is taxable. So send it as a part of your document that you're taking to do your tax. PPP is not taxable. So when you're forgiven, you're forgiven. If you take an EIDL loan from SBA, it's also a loan. It's not taxable.
Okay.
It's a loan you have taken, you pay interest on it. So it's something that
it's separate.
doesn't come into your tax. Yes.
All right. So thank you for that education. Mr. Albert Ayi says good info indeed. Thank you so very much for the feedback. I think the other thing we would want to know, and I know some people try to evade taxes or trying to file taxes also because they feel that if they are going to owe money to the IRS, then should they necessarily file taxes? It's like, I know I'm going to owe money and have to pay. Do I necessarily need to pay taxes? And of course, if you can combine it with, you have any advice on best practices as people get ready to file their taxes. Of course, I think you've mentioned a lot, especially in the area of business owners. But if you can combine these two, if I know I'm going to owe the IRS, should I necessarily file taxes? And what are best practices advice that you can give people who are yet to file their taxes?
I get that a lot. People come and they will say, well, I've not been filing my taxes for years, and so why should I even file it? Because I'm going to owe anyway. My biggest advice to you, whether you're going to owe taxes or not, file your tax every year and file it on time. There are two kinds of penalties that you get: failure to file and failure to pay. So if you know you're going to owe, so you won't file, it means you incur the failure to file penalty, which you pay, and then failure to pay penalty comes on top of it, and then interest come to sit on top of the two. So you're making things worse for yourself. Even if you don't have money to pay, file it. At least you avoid the failure to file penalty. And the earlier you file, the earlier you get to know how much you're owing. So the earlier you can start preparing towards whatever you're going to do with it. But if you don't know what you're owing and you sit there just eating whatever you're eating,
pizza,
the day the IRS will knock at your door, you have no idea what they're bringing. And when they land down looking in front of you, you smell pepper.
You're going to smell pepper.
No matter what, yes, file your taxes. File and don't pay. At least you've cleared one debt. Failure to file, you paid it. And now you're left with failure to pay. You deal with only one trouble. But you have three troubles, I'd rather take one.
Indeed. Wow, good advice right there. And Nati says, what is more advantageous to a family, itemizing your deductions or standard deductions? What would you say to this question, please?
It depends on what itemization, what items you have in your itemization. Well, you see, initially I said that there is your income and there's your taxable income. Your income is reduced by either itemized deduction or standard deduction to bring it down to your taxable income. So the two, the either or, the itemization or the standard deduction, whichever is bigger helps you the more.
Okay.
So if your income is 60,000 and your standard deduction, if you are single, your standard deduction is 12,000, I think you've added 250 or so to it. So you are going to take that amount, 12,000 and change, from your 60,000 to arrive at your taxable income.
Yeah.
But if you have something in your itemized deduction that will add up to be more than the 12,000 whatever, then it means it's going to bring the $60,000 down further.
Okay.
And make your taxable income smaller. The smaller your taxable income, the less the tax you're going to pay.
You're going to pay.
So if you have a house that your mortgage interest alone is 15,000, your property tax is 5,000. That alone is 17,000, right? 15 plus.
15 plus 5.
15 plus 5, 20,000.
To 20,000, please. Yes.
20,000. And then you have donation in church. Maybe you donated, maybe you love your pastor, you gave him 30% of your income. So maybe you give about.
No, you love the church.
9,000.
You love the church. I'm not sure they give it to the pastor. They give it to the church.
Okay, I'm sorry, whatever. You give you give 9,000 to the church. So you add 9,000 to your 29,000. So if you compare that to the 12,000 standard deduction, it means that the 29,000 is bigger.
It's bigger.
So if you go and take 29,000 from 60,000, you get a smaller taxable income. So that would be helpful to you than using the 12,000. But if your house payment is, your interest is 3,000, you hate your check so much that you gave the church only $200, and your property tax is $1,500, and you didn't do anything to Salvation Army, you didn't give anything to Veterans of America, you did nothing. So all your deductions add up to 5,000. We cannot use that, because if we use that, we are harming you.
Indeed. Because
the 12,250 or so will do a good job bringing your 60,000 down to your taxable income than the 5,000.
And the 5,000 will do.
Yes. So sometimes people will come and say, "Oh, I have this deduction. Can you?" I say, "It will not help you. Let's leave it." He doesn't understand, because the person has given. I almost spoke to you. I thought I'm talking to you.
I know.
Because the person has given maybe some donation of $500 to somebody, and he has a church donation of about 1,000 too. So, he wants to add his donation. This is my donation. Master, it will not help you.
Okay. Wow, this is getting interesting, but we have to really come to the end of the program. But as far as talking taxes is concerned, and especially those of us who are from Ghana and other parts of Africa, I know the issue of e-levy is also becoming very topical issue, especially gaining a lot of traction on the airwaves and in the media. Do you mind to actually touch a bit about the e-levy? Do you think it's a right way to tax the people? And why do you think there is so much brouhaha about the situation? And in what way can the government manage it to actually get the best from the e-levy if it's so passed?
The e-levy has become a necessary evil. Personally, I have two feelings about it. Not a feeling, but issues about it. As far as I'm concerned, or as far as I know, government is hard pressed with revenue. Ghana is one of the few countries that collect low amount of taxes from their citizenry. We collect roughly about 12% of GDP in taxes in Ghana, which is way, way, way small. Our peers are doing 18%, and ideally about 22, 24, 25% is good. We are doing about 12%. So we are always hard pressed. When you take away our debt servicing and you take away emoluments to workers, government workers, there's nothing left in Ghana. There's nothing.
Wow.
Nothing from the national kitty. Everything is gone. So for government to do anything, government has to borrow. So we keep borrowing and borrowing and borrowing and borrowing. The key to that is for government to expand the tax net and bring in more people so that more revenue could be raked in and do what we have to do. We don't have to rely too much on borrowing, because now we've gotten into a cycle that is very, very dangerous. It's threatening our very existence as a nation, because our debts keep increasing and we are in a trap. We cannot stop borrowing, because if we stop borrowing, we can't do anything. How do we get out of this? So in the government mind, he tried to do this to bring in more people. The sad thing about it is that instead of bringing more people, it is going to double tax the people who are already paying the tax. Because the people who are taxed in Ghana are the few people in the formal sector. Those who have government work, who do formal jobs that are paid at the end of the month, so they deduct their taxes. These are the very people who also send Momo. They are the very people who send Momo. So you say you are increasing the tax net, but you are rather double taxing me because I'm in the formal sector and I'm the one receiving income and sending it to my mother in the village. I have to pay tax on the money I pay taxes on already. So that is the conundrum that the government faces. And that's why people are pushing against it. Of course, don't listen to what the NDC is saying. NDC is just doing politics. They know that if government brings in the e-levy and they get more money, they can do a lot of things for Ghanaians to like MPP and therefore their chances of coming to power will be reduced. But of course, government has to do something about the e-levy itself. They have to modify it a little bit to make sure that the people who are already paying taxes are not double taxed, needlessly.
But how is that going to be possible though? Like, especially knowing how electronic transaction, mobile money transaction is done, and also knowing that. So, do you think that there's actually going to be a way to deal with this, or they need to give him more time to handle this modifying part?
Wherever there's a will, there's a way. If the government wants to modify it, they can. I think it has to do with doing more consultations with the telcos, with all stakeholders in Ghana, to make sure that how do we bring in some exemptions so to cushion some people, and also probably to reduce the rate, the 1.75%, to something else that may be a little more comfortable for people. But definitely there has to be a way for government to collect money from Ghanaians. We don't pay taxes. That's why we government keep putting taxes on petroleum products, because that's the only way to get everybody to weigh into it. And that one to do that, hey, petrol boy ding, and it's too much. We can't pay. We can't buy. We can't pay anything. We can't do anything. But we want everything. That's Ghana for you. We don't want to pay anything, but we want everything.
Wow!
But of course, like I said earlier on, the e-levy, if government means to implement it, has to do something about the way it is now. The way it is now, it will not pass.
Wow. That is a strong statement. And again, I hope that they listen and do what is right. And as Nati says, the government can also help by minimizing corruption and wasteful spending. Thanks so much for your comments. Mr. J.B Danquah, I know we are pressed with time, but obviously we want to come back at some point in the near future to really tackle this issue about revenue mobilization in the continent of Africa and how we can get creative with it without necessarily punishing or actually pushing too much to the people who may already be paying taxes. The other thing I want you to touch briefly on has to do with this very innovative company, which is the Renters Paradise, which I believe is actually delivering some great solutions to homeowners and also renters. In what way is this helping, and what do you have to say about the work of Renters Paradise?
Thank you. Renters Paradise was born out of my own personal experience. For those of us who live here, not just in Minnesota, but abroad, most of the time you send money to your people to build a house for you, and by the time you get home, the money is completely gone. Or you have the house already, and you leave it to your brother or your sister, your cousin, to take care of it for you. They rent it out and they spend the money. Renters Paradise is coming to solve that problem for you. We are a professional group, a company that will manage your building for you. If you are here and you have an apartment building or just a house in Ghana, and you don't want to give it to your family members or your friends to take care of it, give it to us. We will manage it professionally for you. You only give us a small commission, and then we manage it for you. Your money will go into your account. Our commission. Your money will go into your account on a regular basis, and we'll give you professional advice on how to maintain your building and make sure we get renters to come and rent it for you. If you are doing short stays, it's the same thing. We will take care of it, and as people come in for the return to Ghana, or the return, what's the name of the program?
The year of return.
The year of return or beyond the return.
Yeah, beyond the return.
Are beyond the return. All those are programs that people who have property in Ghana who had people taking good care of it, casting on it. So don't be here and let your property sit in Ghana and let your cousins and aunties just dissipate it for you. Bring it to Renters Paradise. Even if you want to put up a building and you're not sure who to supervise it for you so that your money is not wasted, you can come and see us. You know me, I will not touch your money. I don't need your money. I only need a good name to make sure that when you deal with us, you come back again, come and do business with us again. We will ensure that your money is taken care of, and whatever project you are doing will be done according to your taste and your timeline. So please, Renters Paradise is there for you. We'll manage, we'll help you find renters. We can sell your building for you. We can sell your land. We can help you buy the land or buy a building or rent a place. That's what we do. And I hope that particularly those who are over here in America and Europe, if you're hearing us, just go to rentersparadisegh.com and see some of the things that we have there and give us a call. We'll be there to help you in any way that you want us to.
Wow, that is amazing. Thank you so very much for selling Renters Paradise. And indeed, with regards to what it does, making sure that it's delivering this solution to homeowners as well as Renters Paradise. Before I let you go, as well as renters. Before I let you go, please, do you have any closing remarks?
Oh, yes. If you want to reach me for your taxes or for Renters Paradise, it's 612-423-0659. 612-423-0659.
Okay, give me a second. 612-423-0659. Perfect. All right. So I have your number in the comment box. Indeed, you can always reach out 612-423-0659 and speak with a tax expert and definitely get help with filing your taxes. Thank you once again. Like I mentioned, we'll definitely bring you back, especially when we want to talk about innovative ways that the continent, Africans, can start mobilizing revenue, and also, definitely great ideas to really manage the resources on the continent. Thank you so very much, Mr. J.B Danquah, for helping us with this conversation about essential updates for us to know about our 2021 taxes.
And thank you for having me.
Absolutely. You are very welcome. Definitely, I have been speaking with Mr. J.B Danquah about the essential updates for you to know about your 2021 taxes. Thanks so much for everybody, to everybody who joined the conversation, even up to this point. If you missed it at any point, you can always go back and watch from the beginning. You can also definitely share with your friends and everyone and learn some of these things, which are very necessary with regards to taxes and how it can help you to actually get the best returns and some of the mistakes that you might have to avoid, and indeed the best practices that you need as far as filing your taxes for yourself, your family is concerned. My name is Collins Kofi Opon. Thanks to everybody who joined us. Have a good evening until we come here again another time with another exciting edition of African Stock. My name is Collins Kofi Opon. Have a good evening.
Welcome to your world of stress-free rental solutions. When you work with Renters Paradise, your professional landlords, your peace of mind is assured. Whether you're renting out, looking to rent, buying or selling a property, just give us a call on 055-195-5366 or 055-195-4406. Renters Paradise, your peace of mind assured.
Are you a business owner that needs professionally designed websites but low on budgets? You want an engaging website for your business or organization to increase sales? Get a professional website for as low as $380. Yes, you heard it right. $380 only to increase visibility for your products and services. This package comes with a free domain, business email, web hosting, business cards, listing on Google My Business, social media integration, lead capture form, and it's ideal for business owners, entrepreneurs, community organizations, individuals, and many more. Limited time only. Call 952-288-6574 or visit www.beyondmediasolutions.net.